The economy is losing steam. We all know it. The data show it. But there's one part of it where the recovery never really took hold. Small business. Bill Dunkelberg, chief economist for the National Federation of Independent Business, says small employers are simply not hiring, and collectively they provide the economy with the most jobs by far. Bill is with us from Philadelphia this morning. Bill, here's a question for you. The president has proposed $50 billion in infrastructure spending just in the first year alone, some more to follow, and some tax breaks for all kinds of businesses that have to do with R&D and investment. Is that going to do anything to spur hiring among small businesses?
Well, I think the basic answer to that is no. It's not really going to help. First of all of the federal kinds of spending on infrastructure really involve large firms. Most of them require that you hire union workers, and small construction firms, small businesses don't have unionized workers, and so they won't be eligible for these things. So that's a problem. And the other problem with the infrastructure, of course, is that it takes so long. I mean, there's still a couple $100 billion in of the first stimulus package that's infrastructure that hasn't been spent yet. I mean, so it's just something that's going to take a long time. On the expensing side, of course, small firms don't do much R&D. A few of them do. And being able to expense the equipment will help cash flow a little bit, but it really just changes the pattern of your profits. If I buy a machine that can last 3 years, and normally I would expense it over 3 years, I can do it this year. That means I pay lower taxes this year, but then the next 2 years I pay higher taxes, and it's kind of all washes out. So none of that's really helpful. And what incentive does that give me to hire a new worker? If I want to hire an employee, the employee has to be able to earn enough money to cover their salary, and that's the problem that we have. The top line growth, the sales are too weak to justify hiring anybody right now, especially when you don't know how much they're going to cost you.
So, Bill, what is your recipe for getting small businesses to do more hiring, something we all acknowledge the economy needs?
Well, I think the stimulus way back when should have really addressed the important player here, which is the consumer. It's consumer spending that's really down. If you look at the plunge of the economy in the fourth quarter of '08, it really came from having the consumer go from like 0 savings rate up to 5 or 6%. Each point in the savings rate is like $100 billion of retail sales, so it just evaporated in that quarter, and we really plunged. We need the consumer back on board. If you look at consumer sentiment as well as small business owner sentiment, it's in the tank. And so when people are unsure about the future and are pessimistic, they don't spend the money, and that's the key here. So,
Bill, I want to interrupt you for just a moment to ask, why focus on the consumer? Because a consumer-driven economy explains how we got here to a degree in the first place. Consumer debt, credit cards, teaser rates, home equity loans, that was all part of the consumer economy. Surely we don't want to go back to that.
Well, we don't want to go back to a consumer that's over-leveraged, and that's what we're seeing now, of course, is consumers are paying down their debt. Almost every month, consumer debt goes down, and that's called deleveraging, and that's part of the increased savings rate. So they're not spending the money, they're putting the money into the financial system by repaying the debt that they owe, and that's perfectly fine. Savings in the long run is what we need, because if you don't put money in my bank, I can't make a loan to finance expansion of a business. Saving is important, but of course, in the short run, to immediately go from a situation in which you are using lots of debt and you're spending lots of money to one in which you suddenly are saving, that's a real shock to the system, and that's the difficulty we have here. Now, the question on spending is this. I mean, who do you want to spend the money? You want the government to spend the money, or do you want consumers to spend the money as we try to move the economy forward? And what we had suggested way back in January of '08 was simply pick a number that you want to spend, like $500 billion or the $860 billion in the stimulus, and use that to suspend the payroll tax. The payroll tax is the largest income tax paid by 80% of taxpayers. That's the real big tax. So if they'd cut that, it'd put a lot of money into 140 million paychecks. And yes, some of that would have been saved, but a chunk of it would have been spent. And that would, we thought, be a much better way to stimulate the economy than to pass that $800 billion plus package that, again, a quarter of it hasn't even been spent yet. So we thought that was a much better idea. Let consumers spend the money. Yeah, you're going to borrow $500 or $800 billion. Do it that way.
Bill?
Don't try to run it from Washington.
Bill, we have to wrap it up there. Thanks for your thoughts underscoring the importance of small business hiring. Bill Dunkelberg of the National Federation of Independent Business.